Good afternoon, everybody. It's 12 o'clock on August 3rd. We have a webinar scheduled with TG Macro, Tony Greer. He's going to be going over the macro markets. And, being that we're just getting started and all of our experts are new to everybody, we wanted to go through and introduce everybody. And so we wanted to find out more information about Tony. And so, Tony, thanks for joining us.
Yeah, it's great to be here. Thanks for having me, Mike.
Great. So we're looking forward to getting to know you and kind of get your thoughts on the markets. And so I guess just starting, if you could just tell us a little bit about yourself, your background, how you got started in the markets.
Sure, man. Sure. I came out of Cornell University in 1990, and I knew that I wanted to go directly to a trading desk because my dad was an over-the-counter trader for Dean Witter for 30 years, and I feel like I had it in my blood. I started off in foreign exchange at Sumitomo Bank. So I kind of divide my career in half. The first half from 90 to 2000, where I was an FX and commodity trader. I spent the bulk of that decade at Goldman Sachs. I spent 6 years there from 93 through 2000 and really learned everything that I know about trading and market rigor. From there, I launched my own trading operation to try to capitalize on the volatility in the equity markets. I sat down to trade the NASDAQ at 5,000 in March of 2000 and had a great time trading it for a year and a half after that, and found it, became increasingly difficult to make money on the way down. And I segued into a sales trading role and really leveraged my commodity background in the equity markets because I felt that equity traders weren't really that highly educated in the commodity space and they didn't understand the cycle that was going on at the time. When I kind of did with my experience from Goldman. So I've been writing about markets ever since I was at Goldman Sachs. And then after, I guess, 2000, when we folded out, after 2001, when we folded up our trading operation, I spent the bulk of my sales trading career at Bank Hapolim running their equity division. And then I went over to Dahlman Rose and spent 5 years there sales trading on the transportation, energy, and commodities platform. After Cowan bought Dahlman Rose, I played a little pickup basketball on the sell side that I became really frustrated with. And I had enough support through the notes that I've been writing daily for 10 or 15 years now, in people that were supporting me to go out on my own and form my own product. And that's what I did in August of 2016. And now I am trading the markets, trading my own money, and putting out a sort of two-part publication from my business, TG Macro.
Interesting.
And there's the background, Mark.
Yeah, that's you've been around for a while, which is good. What was it like working at Goldman?
It was fantastic. I joined the J. Aron Currency and Commodities division of Goldman Sachs. They were just purchased by Goldman Sachs and very much a separate entity. I joined there in the sort of Wild West days of commodity trading. I traded the precious metals markets, the commodity markets really aggressively there, and I learned a ton about them. I literally built the contacts up that I refer to this day to try to get an edge in the markets, and that was really probably the most important thing that I did there. But it was fantastic. I mean, we reported to Lloyd Blankfein and Gary Cohn, and it was no shock to me knowing how they ran the J. Aron division to see them ascend to run the entire firm. Because there was a level of rigor and sort of trading intensity that was applied on our desk, that those two guys did a great job of managing and getting the best out of people. And like I said, it was no shock to me to see Lloyd rise to the top of the firm pretty quickly after that. And all in, it was a tremendous experience. It was so good at the time that it encouraged me to try something on my own. The firm was very good to me, and I had enough of a safety net to try something on my own. And looking back, having left the firm in February of 2000 to trade tech stocks in March of 2000, probably wasn't the best idea, but I actually wouldn't change a thing about it because I've learned so much in my career since I've left there, and sort of how autonomous and free thinking you have to be when you're out on your own.
Yeah, absolutely. So take me through the way you analyze the markets now.
Yeah, I start very much, everything starts with a chart for me. I've got to I follow the asset classes and their behavior, all year round for years and years and years now. And there are sort of, I've got probably several hundred position ideas in my mind and images of charts. And I sort of go through a daily process where I check every one of them out and see if they're right for a trade. My process has very much to do with trend following, with finding the triggers that will actually change the trend, but more importantly, to find the right entry levels to jump into it when the trend changes so that you can capitalize on the entire trend. I'm a big moving average and trend line guy. I keep it really simple with technical analysis. I put a lot of weight on market sentiment and positioning. And I'm really not as much of a fundamental trader at all. I'm a slave to last sale and price action. And so that's what sort of helps me trade robotically and with no emotion and just get out when I'm wrong and not really worry about it and live to trade another day.
So being that you look at things very technically, what sort of time frame do you take, like when you're looking at moving averages and things of that nature?
Yeah, I like short-term stuff, to be honest with you. My personal book is a list of sort of buy and hold investments of things that I believe in. Like, I have a lot of names in the sort of in the cannabis space and in the refinery space and some other interesting plays that I have that I sort of leave on. And then I have a very short-term book that I trade around, and I might be in and out in one day if the trade gets to my objective. So it's really, I would say, like time frames really, really vary from 1 day to 3 months to sort of 2 to 5 year horizon.
Wow, so pretty much a little of everything. And so what
Yeah, a
moving
little of
averages,
everything.
and so what moving averages specifically do you look at? Is there like a few go-tos that you really like looking at, or that you think are working
Yeah,
better more recently?
yes, I like zeros and I keep it simple. So I use the 50, the 100 day, the 200 day. I pay close attention to when they cross through each other because that's usually a good sign that there'll be some kind of acceleration. I think the secret to my success has just been, being diligent in watching all of these patterns, and how they take place and really just kind of being patient. Across all these chart images that I have in my head until the price actually gets to the level where I think it's going to have, a real trend change or a real move in one direction or a real acceleration or something like that. But, that's what I wake up in the morning looking for, like what's going to be, what's going to be the security with the rocket fuel up its ass today, for a better lack of a better term.
Yeah, that's great. And so what do you find that you're looking at today that you find works well that maybe 5 years ago or 10 years ago wasn't working very well?
Hmm. That's interesting. I have to say, to sort of just change the posture of that question a little bit, I would say what I do, what hasn't been working well, and I'll call it in the recent era of, sort of 5 to 10 years, being much different from the last 10 years prior. So you can call it like, I don't know, call it the 2008 dividing line where, when we went into, the TAR program and quantitative easing and, basically the mantra of the market is central banks are in control of it. So we are now on the other side of free markets. And so when I look at things that I used to do, call it from 1990 to 2007 that were successful that aren't anymore, I would say that momentum trading has been difficult. I would say that I've been more patient in waiting for entry points. I feel like I used to be able to, when markets were a little slower moving and a little bit more orderly, for example, when there were specialists at the post in equities and when there was open outcry in the commodity markets and even in the FX markets, it seemed to be the kind of thing where I could buy breakouts and, they would hold and keep going, and I would be able to stay in the trade. And then eventually I would get paid, but without too much pain and anxiety after my entry point. And I found that as central banks took control of the markets and the rise of high frequency trading, it's been very difficult for me. In fact, it's not been difficult. It has been catastrophically disastrous for me to trade in the same momentum way that I used to. I feel like it takes you too long now trading momentum to get your position on. And by the time you've got your position on, literally by the time you count your average up, the high frequency traders are taking it back the other way. So I kind of usually, rather than saying through this price, I just want to be in the last 5 years, and even more specifically in the last 2 years, I find myself saying through this price, but with this short limit, that's where I want to buy the stock or buy the security or buy the commodity or whatever it is. So it's not as much as just sort of get it on and sit and wait. It's kind of be much more careful getting it on, because there's probably going to be some kind of a volatile swing back in your face to really test your mettle. And that's just one dynamic that's really jumped out to me in the last 10 years.
It's choppy, you can't hear it. All right, Alex, I'll call you back.
How do you analyze risk based on, you were mentioning before you have some long-term trades, some short-term trades. How do you analyze risk based on the different time frames?
Well, I basically, it's as much analyze it. I call it finding the risk reward as much as I do analyzing it. I'm a proponent of being able to sort of get into a position and put my stop back behind all the moving averages that it just broke out from, right? So in terms of risk management, a lot of times I will size my position by saying, okay, I'm going to buy it through I'm going to buy the security through its last moving average here that it's breaking if I'm a momentum guy. And I'll sort of see how far away that my stop loss needs to be, and I'll use that to size my position, if that's fair to say. So rather than going into a position and saying, okay, I'm going to put $10,000 into this trade, I look at it and say, okay, I'm going to buy it at this price. I'm going to stop out at this price. That's this much of a percentage loss. So how much do I want to really put into that trade? And I'll size it accordingly, to give myself a little bit more room on the stop loss. And in terms of keeping the book tight, I have price objectives for every single position that I put on. So whether it's a short-term one-day position, or if it's a 3-month position of mine, or if it's one of those that I'm keeping, when it gets to my target price, I have a serious conversation with myself and really dissect the markets again, and then try to lean towards taking profits when it gets to my levels. And I just feel that being really disciplined both on the way in and on the way out is one of the secrets that keeps you alive trading for a long time.
Yeah, absolutely. Jumping back to your previous answer, you were kind of talking about difficulties from, or what you've changed based on difficulties. And I'm wondering if what you were mentioning as well might have something to do with the rise of trend followers. How much money is in technical trading and trend followers and things of that nature, and possibly everybody getting in at the same level and looking at the same moving averages, things like that.
So there's definitely, that's something that you have to expect as a primarily technically driven trader. Is that a lot of these patterns and setups and formations are self-fulfilling prophecies, and I believe at some level they are. For example, I'll just look at my favorite stock on the board. I look at Marathon Petroleum, and the stock put in a clear double top at $85 after an unbelievable run. I think it came from somewhere in the 30s. Put in a double top at $85, and that was a good signal to me. Even though I'm long this in the long term, I managed to trade around it by saying, here's a good technical setup so if I sold some puts here, it wouldn't be the end of the world if they, expired worthless. And we got to pull back to the 200-day moving average, and the thing spent a couple of weeks there. And now, when I'm sitting there watching it every day, every single day that it settles above the 200-day is sort of little check of meritocracy in my book. And then that's when I start moving money toward it again. And then as it cleared the other two moving averages post earnings, it was a free for all, and you got the acceleration. So those are the kind of setups that I continue to look for. Like I said, and when things get to their objective, I kind of make sure that I'm out and keep the names on my book to a reasonable number. I hope I answered that question right. I may have meandered a little, Mike. I'm sorry. Uh, 20 to 40. 20 to 40. My long-term book has got, my long-term book, I'll call it, I have about 8 positions in, and kind of there are 2 or 3 positions that are on the border of longer term or not. But I would say I have 8 positions there that I almost never touch. I'm long a couple of technology stocks. I'm long a couple of energy stocks. I'm long a couple of cannabis stocks in there. And then everything else is fair game in terms of the rest of my portfolio. I currently have, count them down right now. I have, call it call it 12 positions with a 1 to 3 month time frame from now, and I have another 5 positions at the moment that I'm looking to close up by the bell today. Some of those I put on this week. One of them I put on this morning, and they're just kind of short-term trade ideas that I'm trying to take what the market's given me, and just kind of ride something into the bell and see where we close today, and definitely get out of it though before I close up shop for the weekend.
Yeah. So
if you want to talk about any of those and go more specific, we can, but I just want to follow your lead here, Mike.
Yeah, well, let's do that. So name a few things that, you mentioned a few sectors that you like. Are there a few individual names or commodities that you're looking at that have you excited at the moment?
Yes, absolutely. I've been short GLD for a while. It's been a really good trade. I shorted it up around around 126, 128 range. On the last run up in the beginning of this year. My thought process was that we are in an extremely inflationary, or at least potentially highly inflationary, if you just think about the potential type of environment, and that non-yielding assets like gold were not going to have a happy home in people's portfolio, and they would pitch it. So I've got a pretty good trade on, not a world beater, but I've been short from 126, and one of my fellow market experts that I keep a close eye on has been looking to buy gold just for a retracement. So today I'm looking to take a little bit. That was one of my 3-month positions that I've had on. Obviously, I've had it on since around, February or March. But when it's getting, gold has fallen from 1350 to 1200. I feel like there might be some psychological support at 1200. It has been a straight run down. It's quite stretched away from its moving averages on the downside now. And I'd love to just take some off because I want to be able to smack away at it when it rallies again. So sometime between now and the close, I'm probably going to bid for some GLD. I'm going to try to get it, on the bid side because I'm still bearish. But I just want to cover a part of probably a third or a half of the position that I have on because it's getting oversold to the guys that look at it on a purely technical and purely sentimental basis. And then this way I can participate again if it rallies back up towards 1250 or something. And that's what I like to do. With those shorter trades, that's one of them. And I hope that wasn't too long or drawn out. I'm just trying to sort of give you the data dump of what's in my brain and how I'm thinking about that position.
No, that's perfect.
Yeah. Let me just look down my sheets here and see what else would be decent to talk about. I bought Molson Coors because I feel like the timing and the headline, it's more or less the technical pattern. But I feel like the timing is right, where a lot of people are focusing on the negativity and the problems that beverage makers are having lately. If you look at Constellation Brands, that stock's finally started to curl below moving averages. Molson Coors Tap just came off from its 112 peak in 2016 to the lows of $60 in 2018. I like to sort of kick around or at least do my research and homework on things that go on sale like that, but probably aren't going to go away as an institution. I have a feeling that Molson Coors is going to figure out their way, whether it's in the beverage space or in the cannabis space. And I just like the fact that they put up a big cannabis headline in their partnership with a company called Hydro. I have to get the right name of it. Hydropothecary type of thing. But I think that this could be the sentiment that turns the stock. There's a pretty decent sized short position in the name. I'm kind of sort of babysitting this. I'm really keen on it staying above the 100-day moving average for me to keep my whole position. I'm trying to risk the lows at 62. And I just bought it this week on their announcement of that partnership with the cannabis company. And I'm probably going to hold it here today, but I'm watching it really closely because the downtrend is real. I'm a trend follower, and I'm just thinking that the time is right for this thing to turn. So that's something that I'm watching closely today. Should it collapse, I would probably take some off, but so far so good. And that's it. I've been short the builders for a couple of months. It's working out well, and that's a trade that's flatlined around $39 between 39 and 40 for me. And I'm trying to decide if it's going to be another leg down or if I should just cover some here. The fact that it has failed the 200-day moving average twice on the upside in the last 4 weeks at $42 is leading me to believe that there's more downside. But when you're short for a while and you're starting to get paid, and all of a sudden, it just won't go down anymore. I get that feeling that like time kills all trades, and I want to get out. So that's one of the just trader, a constant trader battle that you wrestle in your own head with.
Yeah, that makes sense. And
So
then
I'll stop
earlier,
blabbering about my individual position.
no, well, I wanted to follow up on that because earlier I think I saw you in the chat. You were mentioning that you like the trucking industry, and so I just wanted to hear more thoughts on that.
Yeah, the trucking industry it's a really interesting play to me because, it was really, the reality of it is Amazon started this fire. They started this fire with their overnight delivery service and Amazon Prime. And as households get addicted to that type of service and that then being on that type of platform, they look for it in everything else that they do. So, now you've got companies like Home Depot looking to really expand their home delivery service. You've got all different things going on in the trucking industry where while Amazon has really measurably jacked American freight shipments to a new level. If you look at the Cass freight index, you'll see that the prices we're paying in 2018 are above and beyond. They're an outlier versus the last 3 to 5 years, which are an outlier versus the 10 before that. So what we're doing is we're seeing a massive increase in freight here in the country. And then the trucking industry just had a massive scare when Budweiser ordered 40 electronic vehicles, 18-wheelers from Tesla, obviously to deliver beer all around the country, potentially with no driver or one driver. And a lot of people actually left the trucking industry with that print. I did some tire kicking, and I learned that there are some guys that went and got, they ditched their truck routes and they went and got more point of sales routes like Boar's Head routes and Uber cars. And, guys that are drivers are going to drive, but they moved into industries that are a lot more transactionary to kind of save their careers. And what's interesting is that it's left a gaping hole of, necessary truck drivers in the industry. So if you see this morning, there was an article where the trucking companies ordered something like 57,000 new, long distance 18-wheelers this year versus 18,000 that they ordered last year. You hear headlines like there are openings for over 70,000 jobs in the trucking industry. And when I hear that kind of data, and it makes sense with the story that's going on outside your window where everybody wants next day delivery, whether it's from Amazon or from Home Depot or your grocery store, it makes sense to me that, somebody is going to be looking around to purchase, one of the smaller trucking companies. It would make sense to me that Amazon would do something like that. And I think they're in the middle of it, in the middle of looking for one or kicking tires. And I think this space, I just think that underlying fundamental dynamic is going to be a long-standing one and difficult to overturn. So that's why I want to look in the trucking space. I like Werner, J.B. Hunt, and Landstar up here at these prices. And I have kind of starter positions on my books, looking to get into a slightly bigger position for a 3 to 5 month time frame.
Yeah, that's interesting.
That's
Definitely.
my trucking story.
Yeah, no, I saw you mention it before in the chat, and having you explain it as well makes a lot of sense. Also, I know that you've been a bull of Apple for a little while. What do you think now? It's been all over, obviously, the world and everything. We got our first $1 trillion company. You still bullish?
Yeah, I'm even more bullish. I mean, the chart looks like a dream. This breakout above 195, I participated in. I'm long the stock, and I'm not a pie in the sky guy either. I actually don't like the products. I don't love my iPhone. I think my iPhone X, it's a great camera. Other than that, it kind of stinks. But I can't argue with their earnings, and I can't argue with $100 million buyback. When they're comfortable doing it at new highs. And I just feel like the stage is set. We just made it through earnings season, and across the FANG spectrum, you could say Netflix, took a beating, Facebook took a well-deserved beating, and Apple, Google, and what am I missing out? Amazon literally just took it to the next level. When a stock breaks through this with all of this fanfare through $1 trillion, I'm almost glad that we got this out of the way, so I don't have to listen to the $1 trillion commentary anymore, and we can just focus on what the stock is doing. And Mike, like I said, I'm a slave to price action, so I had an Apple position on, and I added to it because I actually survived the dip in 2018 to 160. And I think this is a great place to add. I think that it's very difficult for people that aren't momentum traders to add at this price. And this is the type of breakout that I don't think the price is going to come back for a while now. So, I don't think it's time to be patient in Apple. And that kind of contradicts what I just said about getting into positions, with a lot of momentum. But I feel like this chart just looks so good, and that people are willing to say, you know what, let's have a bigger Apple position for the second half of the year.
Yeah. No, that's obviously it's been straight up, and after earnings broke through some key levels, and here we are right now. I see it up 50 more cents. So it's heading into the weekend plus $1 trillion. That's been really interesting. I want to open it up. I see one or two questions, and I just wanted to kind of go to those guys. I don't know if you can see. You might not be logged in, but I'll read them over here.
I do. I just saw them, so I just responded there. I like Werner Enterprises, and I'll give them a little bit more color there. I just want to get my notes out on it because I do have a decent notepad. Hang on a second. Sorry. Here we go. So what I like about Werner is that they reported. Hold on a second. I just want to make sure I'm looking at the right report here. Yeah, most importantly for me, I've been in the position since I did the trade idea with Real Vision, and I was right. It was literally right around here. I think it was in the middle of last month or so, and I was looking to buy Werner with a stop below based on a stop on close below $35. Right, so it's $36.70 now. What's interesting to me is that it made it through a really crazy earnings report, right, where they just reported they beat on earnings, the stock gapped the higher near the highs, and I have to admit I was celebrating and not sure if it was going to hold up there. And literally before I could make a decision, the stock literally cratered. The stock had a 20% range that day, and to me, that's the kind of move that could potentially be a reversal. So I was really sitting on, I was really concerned for a little while, and the fact that the stock didn't continue to the downside leads me to believe that the stock held in there after earnings. So I think it's going to get back on its feet and keep rallying. It's a solid company. They're a sort of slow-moving, very predictable company, and I'm liking that in contrast to the insanity that's going on with Tesla. I feel like they're taking all the air out of the transportation market, and that's fine. So I kind of want to sit here and be long these sleepy little trucking stocks. And I thought that they would have had I didn't anticipate these wild ranges post EPS, but since they had them and survived them and didn't turn to the downside, I'm going to stay with them and just respect my stop loss levels and know that this tightness in the industry will eventually drag the stocks higher.
Just following up with this, is there an ETF for the trucking index or something that people can keep an eye on?
I don't believe there is a direct trucking ETF. And yeah, I do not see one. There is an S&P 500 trucking sub-industry index that might be a very good proxy, because as I go into it now and look at it, that's S5TRUC index, and that's an interesting index on Bloomberg that looks like a lot of the trucking stocks, but I want to see what makes it up. No, this looks like, I don't think that's a great index at all. No, there's no straight ETF.
Gotcha.
I don't see a straight ETF.
Gotcha. And then John wrote, you're obviously bullish Apple, but what are your thoughts on tech as a whole?
Yeah, I was just going to answer there, but if you can hear me, I'd rather just talk about it. Tech is difficult to fade, right? It's one of those things where we're being, I'm looking at it like FANG is driving the markets. Facebook and Netflix just took a severe earnings beating, but so far they are holding, the levels that they pulled back to after earnings, meaning like they haven't just kept going. So if the two of the horses within FANG are holding in after bad reports, and the other three members are reporting and rallying and putting in new all-time highs, I'm going to look at it and say the FANG complex is going to survive this earnings season and probably not change trend. And if FANG is probably not going to change trend, and, you look at Microsoft, who did, the same act and reported and gapped higher and it's holding the levels, it's impossible for me to be bearish tech when that's what price action is doing right in front of my face. So I wouldn't say that I'm going to go pile into tech as a tech bull. I've got enough exposure with Apple, and it's as a trend follower, I would not be fading it. It's just way too difficult. I will keep my eyes on semiconductors. SMH has really had its struggles this year. I would say that it's probably trading in the middle of its range, and that could be coiling up for a move. It's forming a really, really clear pennant this year. And so this year has been higher tech, higher FANG, while semiconductors have consolidated. So that's telling me that this is largely an internet-driven technology rally with social media and internet and software in the lead. Like I said, when I kick the tires into those subsectors, the charts look good, the trends are constructive, and it's impossible for me to be bearish. That's my take on tech.
Yeah, that's great. That's great. Well, this was a great interview. We got some great insight into the way that you think, the way that you trade, and we're looking forward to having you provide a lot of that information daily. We'll definitely keep an close eye on the trucking and a number of the different topics you were talking about, and look forward to having you update everybody in the live stream.
Yeah, we'll do it. I'm going to try to get as much time as I can in the stream, and if you have any other questions, I'm happy to ask, and I should be around for a while.
Great. All right. Thanks, Tony.
Thanks very much, Mike.